Alright guys, today we're going to be talking about how to think like a professional trader or pro trader. This is something that I have been hearing or I've been asked at least 20 to 30 times every day for the last, I don't know, 3-4 months already. And it's because of the pro trader challenges we are doing all over the world. Now, I've demonstrated this small chart over here, which shows a cycle that it's what basically it takes for you to become a professional trader. Everything starts, of course, with the courage, the mindset. And if you have the right mindset and the right attitude and the right behavior, and you take the right action, you will always have the results or the right results, and the outcome will continue and your performance will be continuous. Just to go through the risk disclaimer for your attention. And who I am, my name is Yagub Brahimov. It's been already more than 10 years that I'm trading in Forex and training people. I've trained close to 70,000 people in total. Just with my webinars, I've trained around 65,000 people in 2015 alone. So there has been many people joining all these webinars, and I'm also now working on a book called Forex Not for Dummies. It's going to be coming alive within a couple of months this year. So I'm gonna be traveling country by country, signing these books and also meeting you guys in person as well. So last week we did a small webinar which was called Risk Reward is Not Everything, and today we are going to kind of continue that webinar and that training, but I'm going to talk more from a mindset approach, because I have been working with people that are trading. Some of them are trading actually 130, 140 million dollars. When I was giving a training in Wall Street on 2nd of January, I met with a group of 17 people. Their total equity that they were trading was $1.8 billion. So I meet with a lot of people from all kinds of backgrounds. I meet people who are trading with $100 and they dream to be rich. And I meet people who are trading with millions of dollars. So some people will obviously think about return, risk, and so on. But overall, amateurs will prioritize their requirements for professional trading or profitable trading journey as the following. They will first focus on the return, then the risk, then go for the time they spent on and reliable platform. Then they'll continue about the cost, and then finally, as a last comment, they'll think about the emotions. But if you look at the professionals that I've been meeting all over the world, their priorities are completely different, and this is because their mindset is different. Every professional trader will start their day with their emotion. I'm not even talking about their trading career. I'm talking about their day with their emotion. They need to make sure that they have the right emotion, okay? And then the second thing that they make sure in their trading activity is that they have the right platform or the right counterpart that they are trading with. The third thing is that they make sure that they are trading the right time, which means that if their strategy is not applicable for news trading, they will not be trading during the certain time frames when high impact news are coming up. And this continues to the cost, then to the risk, and then to the return, because risk and return are obvious final parts. And the reason why 99% of the retail traders are losing is because they focus on money only. They don't focus on other stuff that they can control. Risk and return is something that the risk we can control, but the return obviously we cannot really control as traders. There are too many variables behind our operations. Of course, we can look for probability or other ratios that we can try to maximize our return, but it's something that we cannot control. So therefore, it doesn't really make sense for a professional trader to start their priorities focusing on risk and return. Once again, I'm going to go show you the priorities that most of the professional traders are going to be prioritizing. First, they'll make sure that they have the right emotions and the health, of course. Second, reliable platform, making sure that their platform, their technology is working properly. Third, the time, the trading time and the operational time that they have. Then the cost, then the risk, and then the return. Once again, look at it. The return is the final part, whereas a retail trader, just like you, will always start with the return. I want to make $1 million. That's my priority. That's my number one goal, and then the rest comes. And I want to make sure that I'll achieve it by just investing $100 because I'm just a golden goose there. Well, don't get offended, please. Now, let's get back to the emotions. Just like the traders, the reason why the professional traders look for the emotions is that just like the traders, the market also moves on emotions. So everything starts with the optimism, like the stock market. When there is not big news coming up, everything is like optimistic. You will see that day going kind of on a bullish side. And the impatient traders will jump on without really knowing what's really happening. Then the excitement will carry on a little bit. And then some sorry for my French, but dumbass traders will come and with overconfidence that they know everything, and they'll jump in the market with huge market, and the market makers, of course, will take the advantage of it. This is when the bearishness will take in the market. So when such thing happens, successful traders recognize this as a point of a maximum financial risk. So therefore, they will not be buying, but they will look for short selling or selling in Forex. Okay, so that takes, for the dummy traders that we are looking at, they will first look for the market as a denial. They'll deny that the market is actually going on a bearish side. Then they'll start to regret that they actually took that buy entry at the top of the trend. Then they'll start fearing, oh boy, I think I'm going to lose everything. They'll panic, and they'll get into such a level that they'll start closing their positions at the worst available price. But once that happens, anyway, that's the level when successful traders recognize this as a point of a maximum financial opportunity, because they get to see how much fear is in the market. Okay, and that's the hope that they bring in the market. The relief comes in, optimism, and again, this cycle continues on and on. By the way, today's webinar is delivered to you by A to Z Forex in association with ADS Securities London team. And I'm going to be talking a little after about them as well in the coming minutes. So how to actually, getting back to the emotions part, how to actually overcome emotions? That's number one question every single retail trader will always have. So number one thing that you need to train yourself for is like, you need to tell yourself that I'm going to be trading like a robot. Again, you need to start thinking and trading like a robot. So you create yourself a KPIs. KPI means key performance indicators for your strategy. So you basically set an element, a number of elements. I say, imagining that your strategy involves 2 moving averages, MACD, and a candlestick formation. So you write it down on a piece of Excel file that if 2 of my moving averages are sloping down and the MACD is below the 0 line, and I see a dodgy candlestick formation at the end of the end of the bullish trend, that's the time that I enter the market on a bearish side. So you only enter the bearish once that confirmation occurs. Under no circumstances you will never go against it. Second thing, you can you can consider doing would be actually using pending orders. I was meeting with one of my so-called trainees yesterday in Cyprus. He's actually participating in this. I won't give the name. Yesterday, he was telling me that the biggest fear that he has is the fact that, you know, he's afraid of not hitting his targets. So once you set yourself such requirements A, B, C, D that you put on a check mark base, and you start using pending orders, you will not anymore be worried about all those, because you cannot control them anymore. So the second thing that you can look for would be one trade a day. So you can trade only one trade per day. That's your maximum that you can do. And then once you are doing it, if you have done already one trade a day, and you are using a pending order, and you are using then a set and forget strategy. Imagining you're basically sitting in your BMW, you set your cruise control, and you put everything, let's say 120 kilometer an hour, and you put your maximum speed to 120, and you set it at 120. You know that you can just continue it because there is no obstacle in front of you. You just set it and you forget about it, unless you see some kind of traffic slowdown or so. Then you start canceling your auto cruise control. The same can happen in your Forex trading. So you set your pending orders. You know that you can trade one, and the only time that you can go ahead and intervene that order would be in times of news, as an example. And in order to reduce the fear element for all these set and forget and pending orders, would be using less entry size or smaller entry size by involving micro lots or mini lots. Okay, and something about the fear is that confronting your fears and in such a way that they won't be your fears anymore. You should always confront your fears in such a way that they will not be fears for you anymore. And you can only be doing it by focusing on certain things that you can control. As an example, I told you, you can control how much you are risking, but you cannot control how much you are going to be earning. So therefore, look at the fear that you can control. You look at the part that you can control. So if you are afraid of blowing your account in one entry, fine, it's okay. It's a fair enough reason for you to worry about, but it's also fairly easy reason to overcome. I mean, a fairly easy fear to overcome. The way you can overcome would be basically using 1/10 of the entry size that you can have, and that way you will not blow up your account, and maximum you will be risking 10% of your equity, and that would be still a very high risk that you would be taking. We were discussing with that trainee of mine yesterday, and I was telling him he's by the way trading with, I think it was $500 or something similar, and he's trading with 0.01 lot during his training period. I'm telling him, what is it that you are risking? What is it that you are afraid? He says, because you told me that my target should be 7 profit and 3 loss, I'm afraid of not hitting those targets. And on the other hand, I'm asking, what is it that you are risking? Because he's risking basically 35 pips per entry. He basically is looking for maximum loss of $3.50. So there is no risk factor for him, almost no risk factor for him, so that he should start thinking, or he should start acting fairly relaxed in order to get the best out of his strategy. Otherwise, he will start missing certain elements that he wouldn't be making the right decision on the entry that he would be taking. The same goes for you. I'm using just that trainee of mine as an example, but the same applies to every single retail trader out there. He's just a role model or as an example right now for us. So that being said, I want to also share with you 5 steps that every single trader will pass during the course of his trading period in order to become a professional trader. In psychology, there are 4 elements, but in Forex, I've added a 3rd step here, and I call it the Eureka moment. So let's just go ahead and take a look at these steps that we have. Okay, so if you are looking at the market overall, and you know that you can start trading, you basically start dreaming about the fishing. Well, the fish is just a reflection of our dream. You know, I love fishing. That's why I always love giving an example about the fish. You know, when you start the first time thinking about trading Forex, it's because you have heard from somewhere or you have done some small research and you found out that you can trade with small amount of money and you can make easy money at a certain moment or at a limited time period. I compare this as a fly fishing moment. Okay, for traders or for fishers, let's call, deep sea fishing is fairly easy. You just throw your bait at the bottom of the sea. You see that there are some fishes there, and you're going to be catching some stuff. But when you do fly fishing at a river, salmon fishing as an example, you need to have certain structure. You need to know when to pull your rod, when to react, and how fast or how slow you need to pull. Otherwise, the fish is going to make fun of you. You will never get anything. And that's the unconscious incompetence that traders get, because they just jump in the river, throwing their $500, $1,000, whatever it is, and they expect that they're going to be making millions of dollars. That's unconsciously dreaming about, you know, making money, which is incompetent as well, that they will never get it. And this phase generally lasts between 0 to at least 6 months. During this period, the trader decides, or the trader gets to understand that he's actually incompetent and he cannot just trade without knowing anything. That's the period he understands that there are some indicators, maybe some robots and I don't know, some gurus out there or some signal providers. And he will go stupid. Okay, I'm not indicating anything, but I'm sure you have gone through that level, or you're going through that level. Especially those of you, 9% of today's participants mentioned that they are trading 0 to 6 months. So you have been there, and 18% of you guys mentioned that you have been trading 6 to 12 months so far. So you are at the moment, I'm 100% sure that you're looking for some gurus giving you signals, or looking at some indicators giving you that holy grail that will make you become a billionaire within a month. But I'm afraid to break it for you that will not happen. It will never happen like that. You cannot just become a millionaire, or you cannot just become a professional trader by using one indicator, or by following a stupid guru there. Most of the time, these gurus are anyway there because they cannot trade themselves. Okay, that's the unfortunate reality. And this is end of the first year. You get to understand that, oh shit, sorry for my French, but I need to wake up. I need to wake up and I need to learn. And that's right now 64% of you guys here, that you understand that you need to learn. That's why you are today in this webinar as well, that you are learning, you are investing in your operations, and that will last at least 3 years. So we those of you mentioned that more than 1 year and less than 3 years, you are at this level right now that you're learning. And the next part is almost there, is when you will stick to a strategy that you have learned, and you will start, using that Excel file that I was talking about, basically checkmark base. One reach or moving average meets the criteria, MACD meets the criteria, I've got the candlestick formation, the price is below the moving average, enter a short entry, done, I'm set. That's the almost there part. And the fifth part is going to be just 6 to 12 months after that level, and you're going to be not needing any of these check marks anymore, because your eye will get used to it. When we were going through my trainees' operations yesterday, I was telling him, he had these screenshots of the operations, and the screenshots were taken before the market, and I was just looking at it and telling him, did you sell? He's like, no, I bought it. I'm like, why did you buy? Because it was going to go up. And I could feel his fear. I don't know what feelings he was going through, but it was quite uncomfortable for me, because I felt at some point that he might have sensed that I was trying to push him down or so. But that's actually the level that you all need to aim for. You need to get to the level that you are going to be going step by step, without being these guys quitting their dream, getting to the diamonds, while someone else is actually fighting there on the other side in order to become a professional trader. So this is, by the way, a part of my Forex Not for Dummies book. So I think end of February I will release this part of the book for free on a2zforex.com ebooks section. So you can go ahead and download it on A2Z Forex. So far for today, this is the end of the webinar. We will have another session on this topic, I believe, the next Sunday, and then we are going to be talking about reliable platform, because today we talked about emotions. The next part is the reliable platform. We will be discussing about how you can select a reliable platform, and I can already comment one reliable platform for you, and that's the ADS Securities already, because we have already done our KYCs on all those brokers on A2Z Forex directory as well. So if you have any questions now, it's the time for questions, and for the rest, thank you for your time. Why to trade one entry per day per pair? It's because when you go for one entry per pair, you basically reduce yourself taking wrong decisions. Basically, you try to find that trend for that intraday, and you will be sticking on that trend for that day. You will not be going through this that internal feelings that maybe I should sell also, maybe I should be hedging, and so on. So it gives you the ease of mind that one trade and I'm done with it for that day. So it makes it much easier for you, and you don't gamble that way, to put it very straightforward. But if you, let's say, trade 3, 4, 5 entries a day, then you start, if you start scalping, you start taking stupid trades and so on. That makes it hard for you to learn. So that's the main reason why you should stick to these 5 rules while you are learning how to trade. Okay, or in another word, while you are in the eureka moment, that you have noticed that you have a strategy and you perfect it to the level that you can go to the next level of almost there, or conscious competence level. Seppo is asking, is it not rather better for one to focus on one pair, to trade about one to trade entries, I believe he's asking, to better their fundamental and technical analysis? Well, it depends on your strategy. It's very important. If your strategy is based on multiple entries and you are aiming for, let's say, 15 to 20 pips per entry, then you can do so. However, if you're looking at it in a different way, then the story is completely different. I mean, it really depends on your strategy. Back to your questions, now you are commenting 1 to 3 months first. So back to your question, you can do it 1 to 3 months, one pair as well. It's also okay. However, what I generally teach in my trainings is that you should be looking at, I mean, the hardest pair right now to trade with is euro dollar and pound dollar. These two are the most difficult pairs to trade, because there are too many variables having an impact on them, because there is the USD impact, there is the euro impact, there is the eurozone impact, there is the European Union impact. All of these are having a direct impact on them. So whenever I'm training people, I ask them to practice their operations on euro dollar and pound dollar only. So if you focus and if you limit your focus target for a couple of trading pairs, it is of course much easier for you. Okay, there is a very good question from Dirk, is that could you give an example about emotions to avoid? Emotions to avoid. The best one is you place a trade and you're afraid and you don't wait for the results to take place. As an example, on Friday, in my private Skype group, I commented that buy GBP USD. It was I believe at 1.4180 level, if I recall it correctly. And my trainee yesterday was telling me that he sold it at that level, and I was asking what was the reason. He's like, I thought it would be better. So you don't generally go with your feeling. Okay, that's the main thing. When you are trading, your feelings are going to be 99% of the time wrong. So don't go with your feelings about exiting a position, but go with your proofs. What is the market telling you that you should be doing? And I'm going to be hosting one specific webinar in the coming weeks about how to use the price action. Simple price action. I'm not going to be making it complicated, but I'll show you basically the levels where you should exit the pair or exit your positions because the market is telling you. I'm going to be showing you where to place your targets. So if you look at all these together, your feelings are the main things, or your internal or your gut feeling is your #1 enemy in order for you to become a successful trader. And that's what I would recommend not to do. Okay. Without us is asking, what is the best and the fastest way to learn? The best and the fastest way for anyone to learn how to trade would be joining a live community like we have on A to Z Forex. Okay, I have a Skype group that it's open for every trader out there, but some people are not really using it properly. We have two groups. One has 2,500 people and another has less than 300 people in total. So the best way for you before you take an entry, if you are participating in such communities, would be asking or sharing your screenshot and asking for people to comment about it. Let yourself be challenged. Okay, don't look for the reward. Okay, you are not at the level for looking at the rewards yet. You're at a level where you need to, be challenged. You need to fine tune your trading strategy, and you need to be able to justify your entries. So that's what I would recommend. Join a community and share your entries. Don't be afraid, and be open for confrontations that you are wrong. It's okay to be wrong. At the end, if you are always right, it means something is completely wrong. I have been trading for more than 10 years now. Every now and then I make a mistake. My biggest mistake in 2015 was actually, I thought that the oil was going to be reversing from $45. So we were shorting oil from $90 to 45, and I exited it at $45. So I was wrong there, with no reasons behind. So that's something that I could have done, but actually the way I noticed it that I was wrong was because I made a video about my trading during that time for the gold oil that the oil entry that I was taking, and people started asking what was making me too long, because I actually did enter long for gold at $45 per barrel level, and their comments made me realize that I made a mistake. So that was the biggest learning perspective for me personally in 2015. Okay. The other thing that you could take into consideration without us would be get yourself a mentor. I mean, get yourself a mentor and go meet him in person. Okay. Just like, I could be your mentor myself. I don't charge for mentorship. But get yourself a team of traders, novice traders, 10 to 15 people. It's okay, and invite me. I'll come, and we'll spend once a month, or come to where I am, and we'll spend once a month, one day at our office, and we'll go through the certain elements. It will help you. Or if you don't like me as your mentor, go find yourself another one. All right.